Okay. All right, guys, let's do this. Let's get after it. All right, ladies and gentlemen, it is another Friday. We have come to the end of another trading week. Who would have thunk it? What a week. What a week. How you guys doing? Hopefully everybody's well, everybody's blessed, everybody's had a good week, and you guys know how I define good week, so let me repeat. There's three types of good weeks. The first, in the trading markets, the first is the obvious one where you make a boatload of money. You know, you took a bunch of trades or a couple of trades. Most of them, if not all of them, panned out. You're happy, you're living large. The second kind of good week is the good week where your discipline, your system, your filters, whatever you applied to your trading to give it an edge, kept you out of trades that would have done well, but you didn't lose any money, so that's fine. So you think, man, I really wish I could have taken that trade, but it's one for the journal, it's one for the paper bank, meaning you paper say this is where I should have entered, that's where I put my stop loss, that's where it will come out, and it turns out that's a good week. It might not sound like a good week, but that's a good week because it confirms to you that your philosophies, that your systems, your strategies, your understanding of price action is correct. The last kind of good week is the one where those same principles, filters, systems, whatever, keep you from making horrible trades. So you're like, man, I'm glad I did not take that trade. You know, that in itself, or that is, well, I'm sure you will all agree that that is a good week. So I hope you've had one of those three kinds of good weeks. Of course, the best kind of good weeks are the weeks where you do make some money. And I hope that's the kind of week it's been for you. However, let me say this, especially for those of you who are students, who are learning. And when I say student, I don't care if you've been trading longer than I have. I've been trading 13 years now. Even if you've been trading twice that, if you are new to understanding institutional price action, meaning if you've been doing all them trend lines, all them flags and breakouts and all that, MACDs and stochastics, and if that's how you've been rolling, give yourself some time. Do not try and become an expert overnight. You may be able to acquire the technical information very quickly. It will take time. Let me repeat, it will take time for your emotional grasp, your psychological prowess to really shine through. So be easy on yourself. All right, don't push yourself past an emotional limit that will cost you. And I've done this before. I think I'll do it again. If actually, that's a good idea. I did it on one of my demo accounts this week. I'll show you this next week. A day where there was a clear winning trade to be made in a market. And I decided to I do this every once in a while to show my students what can happen if you don't have emotional discipline. And so my first trade was correct, and then I closed it, and I opened a second one, then closed it, opened a third and a fourth and fifth on the same pair, flipping back and forth, eventually lost 10% on one pair. Now this was simulated, it's on a demo account. It's intentional to prove something, only to see that first trade was correct and would have paid 6 to 7 to 1. Now, I do it every once in a while. One, it's an exercise that I started doing years ago for myself. Whenever I start getting antsy, like I told my students, there's a trade I've been waiting for now for almost 2 weeks. It hasn't played out yet. I said, you start to get antsy. And in the past, I would blow 25 to 30% of my account because I couldn't be patient or disciplined moving back and forth. And so now when I feel that way, when I feel tempted, I just open a demo account, usually a brand new demo account. and I get my frustrations out in that manner. I say, okay, I know it's wrong to do this, but let me remind myself what can happen if you don't apply discipline. So I did that again this week, and like I said, one day 10% down, because the idea is you take every single signal you want to take, everything you think, oh, I should jump in that you wouldn't jump in on your live account or a demo you're trading seriously. Just see how it pans out. It's a great way to tell you, man, don't try this. And so hopefully you guys have applied some discipline. I took 2 proper trades this week, 2 live trades this week, well, live and my serious demo. One of them I'm in right now. That's the one you can see on the screen. Now, first of all, for the students, one second, I need to put this somewhere. I've got 2 computers I'm using today. Let me put this one over on this side. One second, folks. I need a bigger desk in my office. I need one of them executive mahogany presidential size desks. But in the interim, I'm going to use this nice one from IKEA. Shout out to IKEA. Right, so I do not have the time to go over all this again. So what I'm just going to simply do here is I'm going to share with you some screenshots from one second, where do I want to be? So some screenshots from our VIP closed group that I put up yesterday, breaking down what's been going on in EU, because I really want to show this to you. The last month in EU has been textbook price action. When I say textbook, I really mean textbook. It's been textbook. So these screenshots are from last night. All right. I've sent them out already, so it's not hindsight. They are stuff that I've shown our private students or our closed forum students. Now, the first thing to really point out is this is what's been happening in EU. This is one of the 2 ways I told you guys, or I taught you guys to use a Fibonacci. When there's a market structure break, with some degree of accuracy, you can predict where the break may end up at. Emphasis on may. I'm just thinking if I should show you this so I can draw some stuff out. Give me a second. Let me see. Let's get a chart open. I want to show you something real quickly. All right, in the interim, while I'm getting my chart open on this computer. So this is what's going on here. Price dropped down into this level here and took out that low. All right, one second. That's loading up. And took out that low here. And then rallied to the upside. If you take a fib expansion tool, or retracement tool, sorry, from the point of the market, so this here is the controlling high that drove this market structure break down to the low it formed, you can have a prediction. So that's the 121, that's the 161.8, that's the 141.4. That's just exactly halfway in between these 2 levels. As you can see, that coincides with a high there. There's a weekly high over this side, and there's a weekly order block. It may not look like, but that's also a weekly high there. And if you drop down to a 4-hour, 1-day or daily chart, that would be really clear. Let's see if I can show it to you. Okay, cool. Right. Okay, I'm gonna leave this alone because it might be useful, and just open a brand new one. How about that? Open a brand new one. EU, please. Okay. Right, so let's start again, shall we? You take your fib tool. Well, first of all, that level there. If and when MetaTrader gets its act together. What's going on? MT4 is really trying to get replaced by TradingView, isn't it? Okay, anyway. That low there gets taken. Stop hunt, and then structure breaks here. That high there into that other block at the moment. Also, you see that the 1618 level matches up with above there. So we could actually go for this one. But this is reasonably what you'd expect as a maximum extension. The 1618. We may, okay, there we go. We may get more than that, but that's what we'd expect. So there is the stop hunt. There's the stop hunt. What is wrong with my computer this morning? Okay, let's go back here. There's a stop hunt there. There's a market structure break. We're going for, there's a weekly high here, a weekly high here, and a weekly high here. That's what's price, that is what price has been gunning for these last 4 weeks. So as you can see, we've moved into what is almost clearly, okay, we're good now. What is almost clearly a bullish trend, or at least in the interim on the EU. It lines up with a bearish trend on the dollar. Just gonna leave that alone. And this liquidity in this area here is what price has been hunting. All right. If you break it down to a daily chart, this is it. High to low. That was a downward move. It took out this level of liquidity there. And as you can see, it returned to that level several times to pick up some more. And then off it went to the races. The moment it passes this close here, this candle closing above here tells us all we need to know. So there's two phases in which you should have been entering this trade. First phase was all the way down here. Was all the way down here at the 21.4 retracement. You might have come out once it got up here to the 78.6. But the moment it started going up again at this engulfing here, you could have gotten again. You would have come out near the 100 level to see if we're now going bearish. When this daily candle closes above here, that was your sign. This is heading for one or more of the expansion levels. And so, if you then drop a step further, we're still on the same time frame. The question now is, how do we get up there? How do we get up here? Well, when the stop hunt happened down there, this was the first expansion. Fib from high to low, we come back to the 21.4 level. Perfect. Right? See, it's perfect. Now we had a bounce here, which you could have traded over the course of several days. The moment this reverses here, you get out. On this day, you get out until you have another bullish engulfing. That doesn't happen till here. This is perfect here. So you're going to come up this way, gotten out at this one, come back in here, middle of the round, and then here you off to the races. Remember, if you're trading intraday or intra-week, you are always trading in the direction from how we teach you of a daily bias, meaning a daily engulfing pattern. If we got another one or the 214, we'd be expecting to get out anytime from the 121 to the 141. So you can come out here. You could have come out here, this reversal. If you're stating, that's fine. If you are sure of it, it never breaches the 100 level again, as you can see. Now, this is what's happening on the weekly and the daily. It's important because when you start trading your 15-minute charts, when you start following every market structure break or every engulfing or every breakout or whatever trend line or indicator signal, you need to know what's happening on a higher time frame. This is what's happening on a high time frame. Now, after that expansion, this is the next one. So this high, this low to this high, right, puts in a maximum retracement of there, and then it starts to go. By the time it leaves the 100 level and puts in the high there, this is now the closest low to it that drove this price upwards. So you put in your fib again, high to low, and as you see here, it doesn't give you a discount retracement. If you were waiting for a discount retracement, you wouldn't have gotten one. But that's fine, because any retracement from that gets to at least a 61.8 means it's a live swing. So you see here, it turns on the 61.8, it comes back and picks it up here, and then it starts to go. And from this point here, from this candle here, so you could have sat out of this trade all this way from here to here, or have been trading a consolidation style system, which is what I was doing. So between here and here, if you look at my lower charts, and I'll show you in a second, I was getting in and out either way real quick. From here, we see this push up. Why? Because that weekly level of liquidity is now being hunted. And as you can see, we have no bearish days except for this one, but even this was on Tuesday, but even that was not an engulfing pattern, and we're headed up there. Now this is what's happening on a 4-hour chart. This piece here, one second, see if I can. Let's see if I can show you this on my actual chart, if this will let me do this now. All right. We drop down the 4-hour chart. Actually, let's go back to that one we were using, because it's all marked out. Let's see what's going on with that trade. Okay, because it's all marked out. Right, where were we? There we go. You go to 4-hour chart. Notice the last few weeks, it's all been bullish, right? Bullish week, but in between, you can see this period here. This is the one I was talking about. And I remember mentioning this a few weeks ago, that we were in a 4-hour consolidation, or in a weekly and daily consolidation pattern. But this is what it looks like on a 4-hour chart. You see, there's no clear direction. We are bouncing in between these two zones there. We come up, and I think I showed you guys that we come up, we come down, we come up, so, and then here it leaves the zone, right? Comes back in, and then here it leaves it and closes above it. At this point, we're looking for one or two things. either a bullish move that rips all the way through or a manipulation. So this I expect to price in at some point somewhere near the top or the middle of this zone. I fully expect this to happen at some point. Why? Because we have just left, we just pushed up above that zone now for the first time. This could simply be a retracement that takes us up even higher. This is on a macro level now. We're still dealing with weekly down to 4 hour. We haven't started running around on an intraday or intra-week basis. Or it could simply be doing this. It could be dropping below it, meaning that was a manipulation, in which case I would expect it to come back to somewhere near the top or the middle and then go down fully. So that's what we are doing on a macro basis. Emphasis on macro. Now let's get rid of these because I'm going to need that chart in a second. Get rid of these. Right, so let's go back to these. Now, on an intra-week basis, I want you guys to look very carefully at this chart. This is a weekly chart that I've treated like a daily chart, or weekly dividers. You will notice, those of you who know how I trade, let me show you this in a more. For those of you who know how I trade, you will realize that I'm delineating the weekly open on each of these weeks. But you will see something. I am not drawing that line at where the actual broker week opened. Why? Because you can throw away Sunday. Sunday night into Monday morning, you can throw it away. That is not the real institutional week beginning. This is the first time I'm adding this concept to your understanding. The week literally begins on Monday. And so you want to be picking pretty much your second candlestick after the divider to where to draw your line. That's what the institutional systems are using as their weekly open. And so you see this week price is a Z week. This week it's a down week, but not much movement. But the moment we start to really move, here we go. Week open, dip beneath, run up, close. Week open, dip beneath, run up. And then this week, with all that writing in there, same thing. Week opens, dip beneath. So in essence, we're seeing perfect price action from the moment it breaks through the zone. Every week is opening, pricing in a short wick south, W-I-C-K south, and then expanding to meet its objective. And as you can see, more often than not, it is coming back to give you an entry near the beginning of the week. That was there. Here, it actually came beneath it. Same here. And so let's go back to this new chart. Okay, that's working now, I believe. Anyway, if you drop down to a 4-hour chart and you put in the dividers, this week, so that's the start of the week. 1, 2, right? Count 2 candles from the broker line that takes you into Monday. Just ignore Sunday. Sunday is, yeah. You draw that out as the weekly open there. Let's put it in purple. If you're expecting a bullish week now, with the understanding that price is reaching for this levels here. So let me draw them out now. That's the highest high in that region. And I told you last night, for those of you in the Telegram, that I fully expected that to be breached, and it has now been breached. We have an order block in here. We got another block in there. Now, if you drop down to a daily chart and inspect that level, you will see the order block even more clearly. There it is. There it is. See that? So that's where price, and this could be blown out. There's another one up here. Right? And if you were to go down to a 4-hour chart, you would notice that there'd be one here and one there. I'll just draw them out real quick. Now take them off. If you go down to a 4-hour chart, you will see one there. Most likely. I haven't checked it, but from the way the price action is looking, it's clear to me. And another one there. So, but at the moment, this is where we are. This is where our attention is focused. This region here. Right? Now, I did incorrectly state at the start of the week, in all fairness, that I would expect to see a reaction here at this one down there. So I got to be honest, no 2020 revisionist history. I did say that we would likely see a reaction of that one going into this one here. That was because I wasn't looking at my weekly chart well. I was going off the weekly chart analysis I did a couple of weeks ago, and I neglected to realize that this high and this high here from a daily, this is how I corrected my error. Look at this. If you drop a fib from there to there, all right, from this level here all the way down to this level here, this is 78.6. This is a sweet spot, 61.8, 70.6 intermediate level. These, to a market maker, I'll just get rid of that real quick. To a market maker, let's get rid of the fib now that you've seen it. Let's blow that up a bit. So here and here. To a market maker, these are technically equal highs. From a weekly basis, which is what a market maker would be looking at. Look at that. See that? This is classic market maker behavior. Once I saw that, I changed my mind about the reversal happening earlier in the week. These are clean. 1, 2, 3. There's going to be liquidity here and there, running in there. And like I said, we could still blow this one out and go all the way up here. But I made up my mind once I saw this in hindsight on Tuesday evening that we would at least see that. And I called it in advance, and there we are now. So how would you have gotten in? Well, this is how you'd have gotten in. On a weekly basis. So there is your weekly open, right? you want to see price drop into that level, somewhere there. I'm just going to draw it out wide for now, and we're going to go down. So somewhere, I'm not anchoring this at any particular low. I'm just drawing it wide enough for you to see that somewhere beneath that level there of the weekly high, weekly open, is where your entry should have been, right? Somewhere beneath there. If you drop down to 1 hour chart, you can refine that. See, now that is the 1 hour order block that is directly at that level there. Now, could it have blown through here? Yeah. In which case, would have been coming all the way down there. But if that had happened, then it most likely would have been a bearish week. If this was going to be a bearish week, well, we'd have looked at there as a first potential reaction, but then probably south from there to come up all the way down to this region here. There's a couple of order blocks and manipulation. I'm just taking the whole region because there's an order block there, there's a manipulation candle there, whatever. But in here we have, so this was Monday. We got back here for the first time on Tuesday, and then we started having a series of reactions, which I'm going to show you from the screenshots I took yesterday. So that's what I've just shown you on the fresh chart from the screenshot I showed you guys yesterday. There's the order block there beneath the weekly high, a weekly open, sorry. Monday runs up, drops down into Tuesday, and we see 1 hour engulfing patterns there. So this is Monday. Even though it's not the low of the week, but we get our first, significant signal on Tuesday. We get another one on Wednesday. You see that Wednesday is a discount retracement of Tuesday. Thursday is a discount retracement of Wednesday. Let me show you that clearly. So there's Monday. High to low. 21.4 retracement. And you see several reactions on a 1 hour candle. Several. A 1 hour engulfings. But even if you don't take any of them, because technically no candle here closes above this big one there. So technically, till a candle closes above this big one there, and then when this one forms here, this one here, so you could have been forgiven and probably shouldn't have taken an entry on Tuesday. Not just forgiven, you shouldn't really have taken an entry on Tuesday. But overnight, coming into Wednesday morning, we do now see that this level here is now breached, right? And price comes back in there and hits the 38.2 and then again reacts to the upside. You could have taken that entry this way. So that's the exact same picture. Where's what I'm looking for? Yep. So Tuesday low, Wednesday high, right? So from this low to this high here, this gives you a discount retracement there. You could have simply taken it straight off the order block, put your stop loss beneath there or here, or waited for this to happen and this to come back in here. However, I think the real money trade, which was the one I waited for and took, was on Thursday. Because on Thursday, it comes in and it gives you a tradable entry very clearly, framing it of this order block here. When you see this reaction there, comes in and pushes back out, you put your stop loss or your entry just above the order block, your stop loss just beneath here, and then you are off to the races. That is the trade I took on Thursday, which I showed you guys. Let me see if I can find it in my history. This one. Yep, that one. So that's Thursday. That was my entry. That's it there. That same order block there. I refined it using a 1 hour. Got up on the push up. Assumed that was my low of the week or low of the day, and then rode it to till the close, to close at the previous day's high. I was planning to come back in on a retracement. I fell asleep and woke up and it had run away. I'll show you that in a second. But so this is it here. A low to a high. It takes out a market structure break there, right? It comes back down, creates intermediate liquidity, which is a manipulation. Comes back down and takes out that intermediate liquidity back into the original order block zone, and then gives a reaction. You see on a 30-minute chart, there's a big reaction there. This is the first place you could have entered. Now, this picture is a bit wrong. I corrected it the one afterwards. Well, actually, it's not wrong. I mean, let's go there. This is the aggressive entry systems. You enter here, you put your stop loss there, right? 1 second. Am I showing the right one? Yes. So this is the aggressive entry system. You enter there, put your stop loss there. If you missed this entry, when it gave this retracement, you could have entered here when it broke that candle there and put your stop loss there. So here you're trading your stop loss at the bottom of the candlesticks. I'd do this only if you were scalping. Third entry, again on the retracement here. The moment it breaks there, put your stop loss there. That's the aggressive system for scalping. If you are just trading intraday, classically, the way we teach you, when you enter here, your stop loss should go there. First entry at the candlestick formation, first stop loss beneath the zone. Because why? It could come back and dip in a second time, even lower. Once this happens and you get this entry here, it retraces and then pushes up again. If you enter at this point, then you now put it beneath, because this is now the controlling low. See, another low has been priced in here that has been respected. Then you put your stop loss at the previous low. At this point, this is the entry low here. So we're putting our stop loss at the low beyond that. Does that make sense? Type if you can get that in the comment section. To be conservative, you don't assume that that low that has just formed is the right one. You give yourself some wiggle room by picking a stop loss below. But since this formed here, you can now pick this one. And then it pushes up. By the time it breaks the 100 level, the previous day's high, we don't expect it to come all the way back down here if we're right. And so this is a New York entry that I missed because I was sleeping. I told you guys when I closed the trade I was going to sleep because I wasn't feeling too well yesterday. I woke up, I needed blown past this point, but that's fine. But this will have been because I came out here because it reached the previous day's high. It retraces in and then shows your willingness to go higher. You can enter here and put your stop loss here. And of course, we then saw what it did. Now, today, 1 second, see if I can find this. This is a trade that I'm in at the moment. Although I'm giving it a very, very, very short leash. I'm going to switch over to my other computer where I analyze this to show you the price action behind it. So give me a second while I grab that laptop. Right, so this is the trade here. And for those of you who started this session with me at 11 o'clock, you would have seen this zone was already drawn out in advance of price getting back to it. Now, this is the concept behind this. Assuming that we have now, and it's an assumption, it could be wrong, that this was the weekly level that was being gone for, in which case the liquidity has now been swept. If that's the case, that that's the weekly level, and it indeed was respecting this here, that order block there. So that's the weekly order block. That's a bit too bright for my liking. Oh, it's Sandy, but that's fine. Let's go down to a daily chart to refine it. There we go. So that would be the daily order block level there, right? Drop down to a forward chart. So we've gone in and we've put in a 4-hour engulfing here. That makes me feel a lot better about the trade. However, I didn't wait for that 4-hour engulfing. I did this off an hourly chart. So in the morning, when I saw this happen, so this is the classic 1, 2, 3, 4 scalp that I taught you guys in the Telegram group earlier this week. That's a high. So we're at first of all, we're at a higher time frame level, right? We are in a weekly order block and a daily order block as well. So we expect some reaction. This is it's a scalp I'm holding to see if it becomes an intraday trade, which is why I said I have a very short leash for it. Right, and so that was the daily high coming in to the end of the London Open. Price stop hunted it, right, and gave a 1-hour engulfing. It broke down there, right? Now it's a scalp. On a 15-minute chart, that turned into a 15-minute market structure break, right? Even a 30-minute market structure break. And so when I saw that happen here, I put in a limit order for price to return to this order block level there. I didn't chase it when it was down here. Just said when it comes back here, and you factor in your spread when you put that order in, right? You factor in the spread. So that was the candle there. You factor in the spread. When it comes back there, and as you can see, it did here on this candle here. Now that was lucky, I must confess, because I was trying to be a bit too cute with my entry. I probably should have been looking to enter maybe at the wick to give a good 3. Let's see, how many pips would that have been? Technically, you want to see this. So from there, you want to give it at least 2 or 3 pips. So here. But I just literally put it on the money, and it just literally took me in on the money there. And then dropped. Now, at this point here, while it's dropping, also let me make this clear. I have now moved my stop loss, but when I entered the trade, my stop loss was here, was just above this level there. That's where my stop loss was, because that's the high that was taken. So I don't see the need for them to go back and take it again. As the trade begins to move at this point here on a 1-hour chart, when it takes out this 1-hour low there, when it takes out this 1 hour low here, I now feel a whole lot more comfortable that it's going to go further south. Why? Well, we have now had a weekly stop hunt, right? We've had a weekly stop hunt. Secondly, we've had a couple of, not a couple, several days of unrelenting bullish movement. While that's been happening, it's been creating liquidity pockets on the downside. Every 4 hour low that has formed going up, I can bet you at some point these guys are coming back to raid these. I drew them on my chart yesterday for those of you who are watching. Watch these levels. And as you can see, there's so many of them in just 1 week. This is a sign someone's planning something. Bear in mind, these are 4 hour lows. So there's going to be a lot of breakout traders there and a lot of retail traders with their stop losses there. Look, let's put in one more here. In just the last 1, 2, 3, 4, 5, in just the last 5 or 6 days, we have 1, 2, 3, 4, 5, 6, 7, 8, and 9 4 hour lows that would, let's drop down to a 1 hour chart. For those of you who only trade on the lower time frames, if you don't check higher time frame behavior, this is why you get burnt. See, on a 1 hour chart, these all look like places where you would have entered the trade and put a stop loss. Look, if you go down to a 15-minute chart, look, it's even worse. On a 15-minute chart, which you know how many people trade a 15-minute chart and don't look to see what's happening higher up? Several. They don't check. Oh, there's a 15-minute market structure break, I'm in. There's a 15-minute stochastic crossover, I'm in. Well, this is what happens. You don't understand that so this here would look like a very significant low, right? Because it's so far away from here. Definitely that looks even more significant. Just go back the last few days. Look at there. I forgot it. I missed this one on a 4 hour chart. I missed this one on a 4 hour chart. So there's more, right? These look safe on a 15-minute chart, but when you look at it from a 4 hour perspective, look, in 6 days, the market maker has built up several pockets of liquidity. All it would take next week is one down week to wipe out all this. Just one. And even if they want to go higher, they can continue going higher. But we've come here and it's a Friday. This is another thing that I'm factoring into my analysis. We've had, and so Thursday, Wednesday, Tuesday, Monday. So the week opened up down there, right? The week opened up down there. The week opened up down there. Right? There. It's gone up. Other than Tuesday, it went up every single day. Every single day. And we've now reached a higher time frame order block, a liquidity profile. It will be classic for the Friday, the same way the London close will retrace price in a trending day, one direction. Friday is kind of like the London close. Friday morning till the end of New York is like the London close on a weekly basis. And then you see the last few hours of the day will go into consolidation because they want to trap you. If you're still in, they want to trap you and build orders both ways. going into next week. And so once that gives out there, I do expect to see it. I might be wrong, but it might not take out. I don't necessarily expect to see take out Thursday's high, Thursday's low, but some intermittent liquidity on the way, yes. And so the moment that broke, I drew. Now I was in, but if I wasn't in, if I missed this here, this would have been my entry. That there would have been my entry. Enter on the return, put your stop loss above there. Similar to what happened here. Enter on the return, put your stop loss above there. I was teaching while this happened, so I did think about putting in another order, but I'm like, nah, let's not be greedy. Let's see. I took some screenshots of the trade as it began. Let's see if I can find them. Right. Okay, give me a quick second. Right. Let's use this. Cool. So this is what it looked like before we started the class. Let's go all the way back down. So this was where I was waiting for the entry. As you can see there, 1 second. So there's a sell limit order, right? I wasn't in the trade at this point. I was just waiting for it. Bear in mind, this was set up as a scalp, right? Okay. So that was yesterday's trade that I took. That's yesterday's trade right there. Right. So at this point, I'm waiting for fill. Now, I could have just entered down here and said, you know, forget it. But don't chase price, right? Could this have left me behind? Yes. There would have been another trade. It sounds easy to say now. If I'd missed it, I'd probably have been kicking myself. But it's one of the things you want to build discipline concerning. Don't chase price. Just as a matter of pride, right? As a matter of trading integrity. Tell yourself, I am not chasing price. Even if I miss the trade, wait for it to come to you. You know, that's good trading arrogance, right? Cool. So then here I get filled. Literally almost to the pip. You know, this is one of those my to the pip trades. I don't advise you try and do them. Yeah, Gerard, you're right. If I'd stayed longer yesterday, I would have made profit. But this is the thing. Let me address that. So let's go back. He's talking about this here. Right? About this trade here. True, I would have made a whole lot of profit, right? But then what if it had turned around here and gone south while I was sleeping? This is how many people get messed up in the markets. Plan your trade and trade your plan. If you lose, you lose. If you leave money on the table, you leave money on the table. Be comfortable with that. Don't marry one particular setup and try and make it give you children and happily ever after. Right? This is the only time that I recommend speed dating. You know, I'm a commitment kind of person. I've been married over a decade. I've been with my wife now over 15 years, you know. Yes, in real life, you fall in love, you hold on to that person for life. Not in trading. In trading, you speed date. 5 minutes and you move on. Get your profit and you move on. This was framed to be a scalp. And as you can see, there was a significant reaction when I got to my exit. Now, if I broke even and moved my stop loss, would it have benefited? Yes, it would have benefited if I broke even. Actually, so if I got here and I just moved my stop loss down here, true. But this was my scalp, right? It was almost 3-to-1 scalp, 2.5-to-1 scalp. And I waited around for this, and I fell asleep. I was waiting for it to retrace, give me a candlestick low, and then I would have been in here. But I fell asleep, and that's okay, right? It's okay to fall asleep. And yes, am I upset that I lost this? Yeah, but if I planned it as an intraday trade, that would have been different. I was following the scalping rules I gave you guys earlier in the week. I wanted to give you an example of how those rules would work. If you plan a scalp, trade a scalp. If you plan an intraday trade, trade an intraday trade. If you plan, let me write this out. This is so important. If you plan an intra-week trade, trade an intra-week trade, right? But plan your trade and then trade. So plan your trade and then trade your plan. When you start getting caught in between two plans, two strategies, that's when you get in trouble. So some of you enter a trade as a scalper and then you want to hold on to it as a position trader. Well, if you're holding on to it as a position trader, your stop loss should be a lot further. If you enter as a position trader, right, don't just get out as a scalp or put your stop loss as a scalp. And so, yes, you're right. In hindsight, I wish I'd held on to it, but you're playing the law of averages. And so I'm fine with that. Right, so back to this. So I got filled here, literally to the pip. So when you think, oh man, this guy's so great. No, I'm not really that great. I'm just following the same rules you now have. And you don't want to be looking for to the pip entry. Half the time you will miss the entry. So I really should have given this some more wiggle room, but it looks nice to show on screen, you know. I look like I really know what I'm doing, but I do not advise that you try and get to the pip entries. You want to give yourself some room for error. And then I took another screenshot here. So when at this point here is when I leave this trade alone. Remember, it's a scalp. I'm staring at this trade until it does something that tells me it seems to be going in your direction. Otherwise, I ain't bothered. So if this had come straight back up and engulfed this, say it came up to here. Let me show you what I mean. Right. So if this had, one second. If this next candle hadn't dropped, if this next candle had come up in here, I would have closed the trade. Why? It's a scalp. I could still be right about the direction and price just comes up and takes out my stop loss and then goes south. When I'm scalping, I am very, very quick on the trigger to close a trade. When I'm scalping, I want to see quick, immediate reactions in my direction. If not, I'm trading at the wrong time, in which case I should get out. If I'm not trading between 6 to 10 in the morning, London, and 12 to 3, then get out the trade. It's the wrong time. Wait till the right time. Or I got my direction wrong. So at this point, I then walked away. I think, okay, good. I can go make a cup of tea, cup of coffee. I can, you know, cool. I came back and I saw that. Now I'm really happy. Now, all the while, my take profit was in the same place. Why? Intermediate liquidity through the course of the week from yesterday. In essence, if this is simply just, let me show you this. Let me show you why my stop loss is where it is. We come back here. If you just take yesterday's low to today's high, right? That's the 38.2 there. What's to say that this is not just coming to retrace and then push back up? This is a way you can trade counter bias if you know what you're doing and you are scalping. So also, you see that at that 38.2 level is this order block right here. I would just draw it up to that level there. Right? Cool. Wouldn't it be classical price action for this to happen and then for us to see a push up? Because, one second, let's go back there, see if I find that one. We haven't gotten too far up into this weekly order block. Last week, I think we refined the daily to somewhere around there, right? So we haven't crossed halfway yet. I'm not saying this isn't the final retracement, but we haven't crossed halfway yet. And so we need to be careful, right? We need to be very careful. Where's that trade now? Cool. And so there's another block there on the 1 hour chart. There's one here, but and I mean, this, if price reacts there and gives me a 1 hour engulfing the other way, see, it did here. If that turns around again, I'll just close the trade. If I see another reaction of this was a strong one, but I told myself, or not told myself, remember, like I said at the start of this, I drew, this was drawn out before the start of this session. And so I did expect to see, once price crossed that level there, I did expect it to come back, but it's now respected it. So if it doesn't push beneath here before I see another reaction strongly up into that level, by the time it gets midway here, up here, I'll just close the trade for a small loss. For a small profit, sorry. But I'm really looking to come down here, which is a 38.2, sorry, off yesterday's swing to today's high so far. And I'm just going to close for the week. So that will be 2 trades this week, one on GU, one on EU, both scalps. I really could have done a lot more than that if I hadn't noticed my error on Wednesday. If I'd noticed that, if I'd not made that error on Monday's analysis, I would have had a bucket loads of scalping opportunities to go upwards or to go long. But you can see how even with a wrong, okay, actually, one second, let me finish this before I go into that. Hold that thought for a second about how if you know what you're doing, you don't have to lose money because you make a higher perspective mistake. So there it is. And then we had that. And this was the last one I took. Actually, no. We had that. Then that. And then that. And this is the last one I took before we started our class. So when we started our class, that was the picture. So coming back here, like I said, I've just shown you how you can make a mistake on your macro picture like I did this week. I'm going to be honest. Yep, Dragonfly, Gerard, you are right. That's a Dragonfly doji. You deserve some sort of a price for that, like a pack of sweets. We're doing candlesticks with the beginners. This is a Dragonfly doji. You could argue it's technically a hammer, technically, because there's a small wick there, but Dragonfly doji works for me. Right, so like I was saying, this is a week where I was wrong at the start of the week on my weekly direction. I started the week expecting to see a Tuesday or Wednesday bearish move and maybe a bearish week overall. But even with that mistake, because I'm following, or I was following, price action principles on the intraday time frames, I did not take a wrong trade. So while I could have been bullish on Wednesday and then Thursday, I missed out on Wednesday's bullish move, but I got in on Thursday for a scalp. That could have turned into a whole lot more. That's fine. But I didn't take a loss. Now, even if I did take a loss, that's fine. Nothing wrong with losing. But I'm just saying, trading institutionally correctly institutionally means you can get a whole lot of stuff wrong and still not be punished. Because while one principle gets you expecting one thing, so you can get your scenario wrong, like I did to start the week, but you will not take a wrong signal and you will not take a wrong entry pattern because your scenario was wrong. You could get your scenario right, and therefore when you see a signal or an entry pattern that will make you make a mistake, you will ignore it. So it looks like the signal is correct even though you're making a mistake on your signal, but your long-term scenario will save you from that mistake. And so if you let your long-term scenario, your signal and your entry pattern line up the same way, you will filter out roughly 75% of your mistakes. You still get stuff wrong. And sometimes you get it wrong because everything you did was correct and the market makers just decided to do something different. Remember, at the end of the day, you're really analyzing another human being's psychology. So there are no absolutes, but they are high probability turnouts. So that's EU. Similar stuff happened on GU this week. That's GU. So let's put that in. The stochastic is there because I was giving the beginners a scalping system that I wanted to give them some confidence concerning, although they then turned around and told me that they were not interested in the stochastic because they are now full-fledged converts, and I'm so happy that I now have full-fledged converts on trading naked price action, as we call it. So let's get rid of that offending thing. So same thing here, right? Now this one here, that hasn't reached that weekly high, and it may not reach it, is the honest truth, for EU. For GU, I don't know if it will, but I wouldn't be surprised if it didn't. Now you will remember I gave you some manipulation zones to look for a reaction from. This was the main one I told you to, so you could take that one there, or if you wanted to really, this one up here, and just take the whole thing, take the combination of both. So there. So I started the week out on GU. This was my mistake, looking for a reaction in there. Didn't get it. That's fine. No trade. No daily engulfing in there. No trade. Right? No 4-hour engulfing. No trade. Look at this. There's nothing on a daily or 4-hour level that will have made us take a trade in there. And so, even though I was wrong, I didn't get a trigger, and so I kept my powder dry. And as a trader, Kieran's laughing at me. As a trader, I've said this to you guys in the Telegram groups, your primary priority is to preserve your equity. Let me repeat. Your primary priority is to preserve your equity. One more time. Your primary priority, before you think about making money, the first thing you should be concerned about is making sure you don't lose money. Right? And so no 4-hour trigger here, no trade. Cool. We did see a lot of 4-hour triggers bullishly. For instance, in there, look at that. That's a 4-hour stop hunt. May not be obvious to you, but I can see it clear as day, right? And then a push to the upside. This here, reaction there, you know, anyway, was what confirmed to me. So when this didn't engulf on Tuesday, was when I went back and I said, okay, there's a problem here. I've got something wrong. And then with one of my students in private, I think it was Kieran, I think, remember when we did our private Telegram, whatever. No. It was the Zoom one. Was it Tuesday or Wednesday? I looked at that and I thought, snap, you muppet. That here is intermediate liquidity. When I looked at the full zone there, I thought, okay, nah, they're not going to respect this zone. Why? Because if you look at it on a weekly Fibonacci, that's 78.6. There's a high there, right? And there is an order block here. So at best, that's going to react there, but so many people are going to have their stops there. Good to see you, Samuel. So many people are going to have their stops there that again, it wouldn't surprise me if this is what happened, right? There's a high there. There's going to be stops there. There's another high here. There's going to be stops above that too. And so this would not surprise me at all. So the moment I saw that, the moment I clocked onto that, I immediately changed my expectation. Yes, Samuel, you do that. Good stuff. The moment I saw that, and I don't know why I didn't see it to start the week, is the honest truth. I don't know why. Now, I've not been too well this week. I'm on leave from my quote-unquote other businesses and other activities, charity, church, business. Trading is the only thing I've tried to do this week because of my students. And I'm guessing maybe that's why I was too tired to see clearly. But corrected that mistake on Wednesday afternoon. And then from that point, I just knew, no, it's still going bullish. If it's still going bullish, well, I took this. Yeah, that was a demo. That was a demo scalp that I was looking at. Did I take that one? Yeah, I did. I did actually take that quick demo one. I closed it real quick, just testing something. This is a demo account I'm teaching from. I don't show you my trades on my live accounts because I don't want to break regulatory principles, because otherwise then I'd be giving you investment advice. So I have to make it clear that everything I'm showing you is on a demo, even though I am taking some of the trades on the live. So you can't sue me if you lose. I keep telling you, don't practice these on your live account until you figure them out on your demo, and then you make your decision when you want to take a live trade. And so Friday, Thursday, Wednesday, Tuesday, Monday, same principles apply. Also, you go back to the weekly chart. Let's go to daily actually. Right. So this is last month's move. Last month on a daily was a bearish downswing. So high, low. So for instance, it comes down. You'd expect it to get to the 141, 121, or 161. So that's in terms of predicting the market structure break. Once this happens here, you're turning around to see where could it possibly be reaching for. Notice how that 161 is just near that level there. if you're predicting if you are predicting the retracement from 2 months ago, low to high there, comes down and finds a disc. This is perfect. This is just, look at that, folks. This is absolutely spectacular. Daily engulfing there. Daily engulfing there. Price dips back down in, and we're off to the races. And if we get a 38.22 to 21.4, where we're looking for, somewhere between a 1.4, 1.4, and a 1.6, 1.8. See, perfect. So if you were looking at the big picture without making a biased mistake like I did, from last month, start of this month, you knew we were heading somewhere up in this level, and here we are now. In terms of the entries you would have taken, hour. Let me get rid of these. I don't need them anymore. So that was on Monday. Yeah, that was when I was testing. That was my final test of that scalp system. The scalp system I gave you guys in the Telegram. I think that was the example I showed you, wasn't it? Yes, that was the example I showed you, just to show you what it looks like. So let's get rid of all that. And that as well. Right, so again, this is the start of the week. 1, 2 candles, right? Get rid of the Sunday night. So that would have been the open of the week there. Let's put that in purple. It's the open of the week. Well, as you see, price dips beneath it in the same candle, the same 4-hour candle. We're just going to put that there for now. We don't know where the low is till we refine it. We're just going to put that there to say we expect to see some support down there. You drop down to a 1-hour chart. So there, and there is the 1-hour order block there. You see that there, right? So there's the 1-hour order block. Almost identical. And if you want it to be really whatever, that is the full order block there. It starts all the way up there. You see all these candles are bearish all the way down. There's no bullish candle there. So, and as you can see, price has respected it once already here. Let's come back in again. Why has it come back in again? Let's dip down to 30-minute chart so you can see this clearly. Why has it come back in again? Because it has intermediate liquidity. Right, so there you have it. It breaks market structure there, comes back in here, takes out that intermediate liquidity to there. So this is Friday, Thursday, Wednesday, Tuesday, Monday. So this would have been your first entry on a Tuesday. Right? Goes up. To be honest, Wednesday, if you didn't stay in this trade from Tuesday, Wednesday would not have given you a decent entry. Because if you pull this up from high to low, it doesn't even come back down to the 618. So I wouldn't have expected you to have taken an entry unless you were desperate, and this is the kind of desperate entry that will burn you. You would have been lucky here, but this could have burnt you. If you jumped in here, this could have burnt you badly, coming back down to this zone there. However, at this point now, once it breaches the 121 here. Oh, actually, let me add this to you. Remember I told you how a swing isn't live till it comes back down to the 618? Well, the other way it becomes live is if it passes the 121. So if it doesn't come back to the 618, but it blows by the 121 and the 141, then you just know it was a live swing, but the market makers were just in a rush. So let me add that. You want to see it come back to the 618 before you take it as a live swing, or you want to see it breach both the 121 and probably the 141. So at that point, that then becomes the new high. That becomes the new low. And on Thursday, you have a discount entry there. Perfect. This is where you would have gotten in. This is the point you would have gotten in on Thursday. And I think I did take this trade, if I'm not mistaken. Yeah, I think I did. I think this is my second proper trade of the week. It's a 1. Stop hunt here. 2. Market structure break. Here. 3. Return. So if you missed that entry there, this is the one you should have taken here, with your stop loss beneath there. This has been in London, New York, sorry. And so, let's see, if you go from here to here, there you go. So it did put in a 618, and then it's rushing 121, 141, 161 just here. Right, what's happening with that EU trade? It's been a while since I've looked at it. Like I said, it's on a short leash. I will close it quick, fast, and in a hurry. Okay, cool. Yeah, it's not doing badly at all. All right, guys, any questions? I moved the motion that we put in the end there. I know a couple of you came in late. Just go back and watch it from the beginning. Why do I do this reviews? Because sometimes you have to go back and look at something in hindsight to understand how to anticipate in the future. As you can see, I'm anticipating it live as it's happening. But for those of you who are just starting out institutionally, it's hard to see it live. But when you go back at the end of a day, at the end of a week, at the end of a month, and say, this is what really happened. This is how I started to get it. I used to review every single week and month at the end. And then say, okay, if this happened, of course, you see 3 or 4 different ways it can happen. When I first started, I'd expect the next month to go the exact same way the last month did. Half the time it wouldn't. But eventually I figured out there's only so many ways a week or a month can go. I may show you that next week. There are between 6 and 8 distinct, but really 4 generic ways that a week or a month of price action can play out. There's only 6 to 8 in specifics, but you can condense them to 4. And when you see each of those 4 or 6 or 8 over and over and over and over again, when you keep seeing that's how that month worked out, that's how that month worked out. Eventually, when a new month or new week is playing out that way, you can say, shoot, I know what's happening here. And so that will be one of the greatest things you can do for yourself to develop as a trader. And you can do it every day. If you're a scalper, do it every day. I'm not a scalper. That's why I do weeks and months. But if you're a scalper, every single day, how did it play out? Was it open, high, low, close? Was it open, low, high, close? Was it an entry above Asia, beneath Asia? Was it above or beneath the daily open? Was it a discount retracement of the previous day's low? Was it a premium retracement of a previous day's high? Just keep, like you said, that's right, Karen, keep analyzing it, right? Rinse and repeat. And then very, very, very quickly, you catch yourself thinking while it's happening live, could this be pattern 1, pattern 2, pattern 3, pattern 4? Okay, if it's pattern 4, what would I expect? Okay, if it's pattern 4, I would expect it to dip above the weekly high, running, and then that's how you start forming your scenarios and your signals. You will still take losses. That's fine. Just limit your loss to a maximum of 1%. And unless you're scalping, go for a minimum of 4. fine. That way, even if you are wrong more times than you're right, your profit will more than cover for your losses. All right, guys, in the absence of any questions, I move the motion that we end it there. Hopefully see you next week. I am tempted to take next week off YouTube and strictly focus on our students. And I think we may do that. Let's see how it works. But there is a good chance that we take next week completely off YouTube and just focus on some hands-on interaction with our students privately using Zoom and one-to-ones. So stay posted for that. But whichever way we decide to go, there's our weekly schedule, our normal weekly schedule. Like I said, at least half of these usually happen off air, for those of you who wonder why we're not on air every single day. Also, starting from this month, coming August, we're going to significantly drop or reduce the amount of free stuff we put out. We've got a fair number of students at this point. We want to focus on them, but you still got a chance. If you want to be a student, this is what you have to look forward to. And it really begins to ramp up from the 1st of August, well, the 3rd of August, which will be Monday next week. I've got a couple of students. I've got about at least 3 to 4 students at the moment in the comment section. I'll let them post to see what they think about the program so far, guys. Gerard, Kieran, Natalia, whoever else is in there. Can you let the good people of YouTube know whether or not you think it's value for money? I definitely think it is. How much is it? Well, you get all that for $79.99. I think it's crazy. I think we are allowing ourselves to be robbed. But for starters, while we're tweaking a couple of things, we're treating this as a beta test. That's what it is. And once we've got 50 students, that drops down to $119.99. Yeah. How do you get on board? Send an email to israelkeysgroup@gmail.com. You can also reach us by Telegram or WhatsApp. That number right there. All right, folks. See you at 9:15 on Sunday.